SpaceX reportedly in the middle of hosting analysts this week as it prepares to go public later this year in what could be the world's largest ever public offering. Given unprecedented size and OpenAI and Anthropic likely following suit quickly after, our market's prepared to digest these monster IPOs. Joining us now is Rodney Comegys, Vanguard Capital Management and head of global equity there. And it's really great to get your perspective on this, Rodney. I mean, obviously, you know, these are deep markets. We can absorb a lot of supply, but we're talking about at least $3 trillion, at least notional face value market cap that's going to want to get into our indexes, onto our markets. How are you thinking about that as somebody who has to kind of manage the way that some of the biggest index funds are handled?
Well, Mike, first of all, thank you for having us. It's an exciting time for the market with three of the biggest IPOs in U.S. history lined up to come to the market. But I think we have to keep in mind that as these IPOs come to the market, they're going to have a relatively small amount of free float. I mean, what we've heard, the talk is SpaceX will only bring about 5% of the company to the IPO market. You know, and if it's a $1 trillion company, that's only $50 billion. That's actually not that much capacity. Now, what usually happens with IPOs over time is they'll release more shares. So it'll take a number of years until, you know, the entire company free floats, if ever, depending on whether the insiders continue to hold it or not. So again, I think we have to think about it as a $50 billion index inclusion, not a $1 trillion index inclusion for market absorption purposes.
Yes, of course. That is a good reminder. And just to be clear for folks out there, things like the S&P 500 only weights companies based on the amount of free-floating shares that they have out there. Obviously, privately held shares are not counted in the weight. That being said, there's been a lot of talk and maybe some preliminary work done by SpaceX and others trying to perhaps speed their inclusion into some indexes, whether that means they don't have to be seasoned and trade on the market for a certain amount of time. Who knows what it means for the profitability standard. So is that something that you think makes sense? Because I do know if you own an index fund or run an index fund, you do want it to be representative of the corporate sector in general.
Yeah, Mike, our Vanguard's best practices in this space are IPOs should be included in the index almost immediately, within a few days after they list. And it's true that legacy index rules really thought about small free float as a reason to exclude them. There just wasn't enough shares available. But that was when we were talking $100 million IPOs, not $1 trillion. At a $50 billion available traded set, these stocks should be brought into the index as soon as possible. And you're seeing index providers change their rules, update them to match the modern stocks that are coming to the market. And we think that's a really good thing. Vanguard's best practice in this space for index providers is get them in. They're part of the market. Be a part of the investor's return.